Let's get more on what we can expect from the local session with Evan Lucas from IG in Melbourne. Evan, thanks so much for your time. First of all, let's recap what we saw on Wall Street overnight. The US economy, is it finally beginning to close that gap?
Certainly looks like that could be the case. I mean, the data last night was, again, relatively solid. I wouldn't say it was strong, but it was certainly solid. We saw jobless claims now coming in at the lowest level they've been since November last year. That is a really good thing to see going into what we call employment week. So next week you do see non-farm payrolls, you see the ADP version of it as well. There's a few PMI and also PMI data that comes out that has employment data inside of it. And then obviously the unemployment rate as well comes out next week. So the jobless rate at that level is a positive sign to see it. 311,000 jobs claims for last week. As I said, that is the lowest read since November, which means that that harsh winter may have started to actually peter out. And then, as you already alluded to, the GDP print was better than expected in terms of the revision up to 2.6%. That is reasonable growth. I wouldn't say it was great growth. It is still below trend for the US. They saw a 3.3% jump in consumer spending, and that's where they saw most of that uptake. It makes up 70% of the economy in the US, so that is why you saw such a solid movement in that last quarter particularly. Was good. It was below consensus though, so 2.7, but all of that should be positive news. We didn't see that in the markets, and I think the reason for it is that if you actually start to have a look, we are now 2 trading days away from the end of Q1, and Q1's been a very, very flat, almost zero-sum game. If you look at the S&P, they started the year at 1841. That was the close on the 31st of December, and we're currently sitting at 1846. So we are very, very, very close to zero. Dow has been always in a negative trend this current quarter, and they're off around about 300 points. And it's similar across the globe. If you look at the DAX, if you look at the CAC, also the FTSE, they're almost zero-sum games. And even here in Australia, we are sitting pretty much dead on that as well. At 53.50 from the close last night, we are 1 to 2 points off where we started the year. So the negative 3 or 4 points that we should see today could almost end up being dead flat again as we do move into Monday's sessions. And that's all coming down to the fact that it looks like more window dressings going on rather than actually the economic data. But as I said, it does look like we are going to see Q2 and Q3 getting a little bit stronger as we move away from what has been a fairly, lackluster Q1.
Evan, let's talk a little bit about the greenback overnight. We did see an interesting setup, I guess, ahead of next week. We've got some big data out in the States. We've got non-farms on Friday. How are we seeing the trade-in approach to that?
Yeah, and the trading approach has been quite interesting. If you have a look, disregarding the Aussie dollar is a completely different story. If you have a look at the US dollar against most of the top sort of 5 G10 currencies, so the euro, the yen, you can throw in the dollar CAD in there as well. The US is doing incredibly well against the more sort of stable risk currencies, whereas things like the CAD and also I'll put the Aussie dollar back in there, they are moving the other direction. I think if you do get next week some very interesting news coming out of the ECB, some really, really solid prints coming out of the US. So as you said, non-farm payrolls and the employment rate next week. We also get a bit of a read into how the manufacturing arm is going. We saw the East Coast last week. We'll get some of the West Coast and then the actual whole country as well. All of that seems to be pointing to what we saw out of Janet Yellen, that there is certainly strength in the economy, and that should be strength for the US dollar. Again, gold has remained under pressure. It is still breaking down after having a 16.5% rally in the first half of the year. It's really started to break down over the last 2 or 3 weeks, and the US dollar strength is where it's moving to. So the euro breakdown, the yen breakdown is a good thing. It obviously shows that also risk is on because the Canadian dollar has finally broken out of its downtrend against the US dollar, despite the huge differentials between the Bank of Canada and then obviously what's coming out of the Fed. They are very dovish on one side and sort of almost neutral to hawkish on the other. So that's an interesting development. That risk is certainly picking up. It just hasn't filtered through into the equity markets yet.
I want to ask you about the outlook for the Aussie now. We've got it sitting at 92.5. A lot of people didn't see it this high at this stage in the game. We know a lot of this comes down to the fact that we seem to think that the RBA has closed the door on further easing for now, at least. How much further could the Aussie go in the next couple of weeks, Evan?
Yeah, I think we'll probably take that in 2 sides. If you look at the technicals have been the ones that have really sort of helped that drive up higher. So at 90.5, a lot of, for instance, Goldman Sachs, also Credit Suisse and UBS, all of a sudden basically basically turned their corner and said we've closed out of our shorts and moving to a long position, because technically this looks quite amazing, and it is certainly that perspective. They've got stops that are around about 93.5, even some of them has got as high as 93.9, so that's a long way to go still from where we're at, and the reason for it, as you said, there is also now fundamentals coming on behind it. Glenn Stevens' address to the Asian Investment Conference over in Hong Kong was the first time we've actually seen him not really alluding to the fact that the Aussie dollar is high. He's more concentrating on housing, he's more concentrating on that East Coast, economy and the demand that's come from those low interest rate environment, and that is making those bets about a possible rate hike even easier to make. So listening to what the brokers are saying, listening to what those investment banks are saying, the Aussie dollar still has probably about a cent to go in terms of where they believe it'll stop out at, and that is still a long way away. So interesting times in the Aussie dollar. It does look very positive. Next week is going to be incredibly interesting because Tuesday is the RBA rates decision. It'll be very interesting to hear what they say in the statement, whether or not it again really pushes the envelope with regards to if it could even be seen as hawkish, because judging by what we've heard out of Philip Lowe this week and Glenn Stevens, they are certainly seeing green shoots in the non-mining space, and that is all Aussie dollar positive because it possibly raises the opportunity of a rate hike at the end of the year.
Evan, we'll be watching that space, I know, and especially on Tuesday when we get that decision out from the central bank. Let's talk now, though, about the trading session ahead of us today as the first quarter close approaches.
Yeah, the first quarter, as I said, it looks like it's going to be a zero-sum day. We look like losing around about 3 or 4 points today. I actually think you may find us finishing dead flat. It'll be very, very sporadic too. Having a look at what BHP did over in London and New York, they were almost differential, dead even on what they're doing. We did see iron ore tick up last night, but again, it hasn't affected the shares that it should affect. Rio and BHP in London, were fairly flat. They were off slightly, but not by a huge amount. And I think at the moment, heading into the end of the quarter, as I said, there is definitely window dressing going on. We saw that yesterday. We were off almost 1%, and then we just rallied all the way into the close on relatively light volumes and almost no news. So I think that's what you're seeing for today and also on Monday's trade. Watch the end of Q1. It has been a very, very lacklustre quarter, although it has been interesting on a trade front month to month. It looks like we're going to finish dead flat from where we started the year.
Interesting. Evan Lucas from IG. Thanks for chatting with us this morning, Evan.
Thanks, Kate.